both for Colorado Springs as well as for Pueblo, average rents have been very stable really for the last 5 years. And whereas the cost of operating have gone up in terms of various different maintenance costs. I mean, if you redo the parking lot, it's going to cost more. Do some electrical repair, it's going to go up. Cost of insurance has gone up also because that the replacement materials cost more. Sheetrock costs more, copper costs more, and so forth. So insurance is going up, and likewise taxes have also gone up. And so the cost of doing business is another important factor. So average rents, so owners are really getting squeezed, and so
the AIG collapse had a tremendous impact on insurance. We have seen our insurance for property liability almost double in the last year. And it's hard to find anyone who will insure you for what it was a year ago. The AIG collapse had more impact in the market than I think a lot of people were going to think that it did.
That's interesting to know that, because we've noticed that that insurance rates have gone up dramatically. You know, right after 9/11, of course, insurance rates skyrocketed, and you know, the rule of thumb number that we used up until recently, and that was after, you know, the 9/11 thing kind of calmed down, was $150 to $200 a unit, and now we're seeing $250, sometimes even as high as $300 a unit. And I hadn't thought about the AIG thing, but yeah, that makes all kinds of sense.
It certainly trickled down. The other thing that's affecting us right now is the time that claims are paid. There is a lot more hesitancy for the insurance companies to not do a thorough investigation, and I think that has a lot to do with economic times. I think that they want to make sure that losses have occurred, that they've occurred as they've been reported, and everything is being done to limit the claim to be paid out.
Well, I guess that that makes sense, because owners are under just a tremendous amount of pressure. You know, there's essentially two markets. There's the market for the renters, which for the last 6 or 7 years has been phenomenally good. I mean, there's all kinds of choices. And as we've said earlier, you know, rents have really not budged. I mean, rents in Colorado Springs are give or take 87 cents a foot, which is no different than they were in 2002. But yet costs, as we've described, have gone up, you know, very dramatically. And so, you know, from an owner standpoint, the net operating income has dropped significantly. And just to make matters worse, when you're talking about buying and selling, the capitalization rates, which are what buyers generally use to value properties, I mean, use a lot of things, but that's probably the thing that gets used the most, have risen. And of course, when cap rates rise, that means prices depress. And so you've got a lot of owners that are in a situation where their costs have gone up and their net income has gone down. And so you add that to the fact that cap rates have risen, and their properties have depreciated in value anywhere from 25 to 40%. And so if they bought that property in the last 7 or 8 years and put a 75% loan on it, you know, the result's obvious. It means that just about everybody, you know, their property is worth, in many cases, less than the loan. And so they are doing everything in their power to try to cut costs in order to try to hang on to the building. So maintenance suffers, I mean, everything suffers. And you know, long term, of course, that's not good, but right now owners are worried about, you know, can I make next month's mortgage payment? They're not worried about next year. I mean, they're worried about it, but they're more worried about next month.